Let's talk about how much money you truly need in your account to start day trading. So I get the question a lot of how much money do I really need to start day trading. So in this video, I'm going to go over some advantages and disadvantages of different account sizes. So let me just share my screen. So the first account size is going to be super light. It's going to be $50. I personally wouldn't recommend anybody start this light, and I'll go over the reasons why. So the very first reason is that you will only be able to trade super small stocks basically. So in stock hours, we usually trade high liquidity names such as Tesla, Nvidia, Meta, Apple, stocks like that, and there's a lot of reasons for that. So if you can't afford to trade contracts of those stocks, it's going to be a lot harder to find consistency, because some of the stocks you might be trading, they might be penny stocks, they might be stocks you hear on like Wall Street Bets. So the moves in those stocks is not going to be as reliable as moves in the big name stocks like Apple, Microsoft, Google, Tesla, Nvidia. So that's going to be the first disadvantage of trading with a $50 account. Now, if you do want to trade our stocks, it's going to be extremely hard to find contracts that are going to be worth even looking at. So let me show you right now. So here's the option chain, which basically shows you different strike prices and then what the options cost. So if you have an account size of only $50, let's say you're looking at puts, and this is Meta, so you would have to trade the 440 or the 435 puts, which is super far out of the money, and these contracts basically have no inherent value in them. So we did end up trading Meta today, and we traded the 480 puts. So you can see that these are $700 just to get in a position. So if you have a $50 account, you wouldn't be able to trade these contracts. You would have to get something that's under $50, which is all the way here, super far out of the money. So the problem with this is that these contracts, even if the trade goes in your favor, they're barely going to move. So let's say best case scenario, you make 10%, you're going to make like $3 or $4 on a contract like this, versus here you're going to make $70 to $100. So that's one thing that you want to look at. Another thing is when you're trading super far out, these spreads percentage wise are huge. So let's say the 435s, because if you have only $50 and you tried to fill market here, these would cost you $53, so you wouldn't be able to afford that, so you'd have to go to the next one. So you get filled at $40, and the spread already is 34 and 40. That's going to be, let's see, that's a 15% spread. It is only $6, but it's something to consider, because if you're making 10%, even 20%, and you get filled at negative 15%, that's obviously not an ideal scenario. So let's just go look for another stock. So we've been trading Nvidia a lot recently, so let's see. And you can see Nvidia contracts are super expensive, especially if you have only a $50 account. You can't even see what you would be able to afford here. So let's go farther out. So you'd be looking at the 700 puts when we're trading at 860. So you'd be $160 out of the money. So I wouldn't even recommend that you would trade this stock. So let's go to a stock that might be a little more affordable, Apple. So Apple you can afford to play kind of close to the money. So that's something that you would want to consider, is looking at stocks that you can afford. Because like I said, Meta, Nvidia, you look at SMCI, Tesla even might be expensive. So those you wouldn't be able to even consider trading. Something like this is going to be a different story. You can get a little bit closer to the money, but still it's going to be very hard. looking for contracts throughout the week that are going to be even worth trading, and looking at stocks also, because you might have to trade penny stocks or something degenerate that we don't really recommend in stock hours. So that's with a $50 account. Now let's go to the next one, a $500 account. So it's going to be a lot easier to find contracts on the stocks that we play. So you can play pretty much most of these tickers. Apple, Amazon, Microsoft, Tesla. Nvidia is going to be hard because they've gotten more expensive recently. AMD you'd be able to trade. Meta, you can go a little bit farther out of the money, so I can show you an example there. But the good thing about having a $500 account versus a $50 account is you can play a lot closer to the money contracts, meaning your contracts are going to move a lot smoother and how they're supposed to, versus something that's like I showed you on the video, $160 out of the money. Those are barely going to move. So these contracts will pay you a lot better, and you'll be able to grow your account in a more healthy way. So let me show you some examples of what you would look for on a $500 account. So you can see on Apple, you can trade right at the money and still be fine. You can even take multiple trades. So let's say you took one trade, you stopped out 10%. That's going to be like a $15, $16 loss. You could trade it again and still have more buying power. So that's good. Now let's go to another stock. So Microsoft. Go to what we're trading at. So these ones will cost you $300. So again, you can afford to trade right at the money, which is typically what you want to look for on most stocks. The other thing you want to look at obviously is going to be volume. So you might even trade the 400s instead of the 40250s because they have more volume and more open interest. So that's the benefit of having a $500 account, is you can trade better contracts and you're not going to be super far out of the money to where these contracts are basically not even going to move. All right, and here's the next thing. Depending on the stock you're trading, so like I showed you an example in Apple where it's only $160 a contract. If you're trading, let's say, $400 contracts, you're right on the line of full porting on a trade. Full porting is basically when you put your entire account's value into one trade. So if you are trading, for example, a $400 contract on a $500 account, it's a lot harder to manage your risk on your entire account. So you might, because like any given trade, you have to give it its room, right? So let's say you take a 10% stop loss on, your entire account, then it's going to be harder to make that back versus in the situation with Apple, if you take a 10% stop loss, you can make that money back in another given trade pretty easily, just because you're not full porting your entire account in that one trade. So let's go on to the next tier, is going to be the $1,000 account. So there's a lot of similar concepts with the $500 account. You can trade the same stocks often, high liquidity stocks, big name stocks, and pick good options. The benefit of having a $1,000 account versus a $500 account is you can comfortably take multiple trades in a day. So if there's let's say $300 to $400 contracts, you can take 2 trades, maybe even 3 in one given day. So you can comfortably take your stop loss knowing you can get back in if it sets up again. So a problem that people have when they're full porting is that they know if they stop out, they won't be able to retry it. So that would be fixed if you have a $1,000 account. So you can stop out, wait for it to set back up, take the trade again if it's set up right, and potentially make your loss back. And then in the long term, this is going to be better for account risk management because, like I said, you're not full porting your entire account's value in just one trade. And let's go to the last tier. Is going to be the $5,000 account. With this account size, you can trade pretty much any name that we trade in stock hours. Nvidia, Tesla, Meta, SMCI, all the stocks I talked about before. You can afford all those contracts. You can play the best contracts, so you can actually choose them how you're supposed to, looking at high volume, tight spreads, close to the money, things like that, and versus just what can I afford. You can actually trade contracts that are going to be the best value. And then again, you can take multiple trades in a day, so you can comfortably stop out of your position knowing that you can take that trade again. And for long-term account risk management, this is obviously going to be better because you're not risking your entire account in one trade. Or say you take a 10% stop loss on your entire account, obviously you're down 10% on your account. Versus here, let's say you have $1,000 position size, a 10% stop loss would only be 2% on your entire account. So it's going to be relatively easy to make that loss back. And over the long term, let's say you have 3, 4, even 5 losses in a row, you can still make it back because you're not full porting your entire account. After 5,000, it's pretty much all the same principles, but you can start sizing up your position. So instead of a $1,000 position on a $5,000 account, let's say you have a $20,000 account, you can just increase this position size. But all of these principles are pretty much the same after you get past 5,000 or something like that. You could even argue less than that. But from 50 to 500 to 1,000, you're gonna have the most dramatic changes in your mindset during trades. So yes, it is possible to trade with a $50 account. It's just going to be a lot harder, and you have to be super strict when you're in when your account size is only $50. So you can't let a trade take your account down by 50% because now you're trading with $25. You pretty much won't be able to afford anything, and then you would have to refund your account. So this is pretty much how I when people ask me how much should I start out with, I usually recommend about 500 to 1,000. Anything past that is just extra, so it's gonna make it easier, but it's not necessary to get started. But when you have less than 500, it makes trading in an intelligent way a lot harder, because you obviously can't afford the right contracts. You won't be able to stop out of a trade and then retry it if it sets up again. So your psychology is going to be off a little bit. But hopefully you guys like this video. We're going to have a lot more videos coming soon. And also, if you didn't know, on Wednesdays, stock hours, we have a free day. So if you're new to trading, before you want to put money in, you just want to watch us trade, you're welcome to do so. We're going to have a link in the description below. But I hope to see you guys soon. Peace.